most people don't really truly understand what Bitcoin is yet. We're in our little bubble and we understand it. We talked with people who understand it inherently. As you said, Bitcoin is seen as a risk asset. We talked before about how we're kind of in a gambler's economy. Like we have a lot of people out there who just feel like they're getting behind and they're gambling to try to catch back up or get ahead and taking a lot of risk. And so Bitcoin is seen that way in a lot of ways, and as are the meme coins. And you see the meme coins take off, it's because people are just risking money. They're like, come on, I hope that I can catch up to this inflation. Everybody can feel that things have changed and are changing rapidly, especially after the COVID lockdowns. And they have the sense that something is not the same as it used to be. And you've seen the prices skyrocket, you've seen homes skyrocket in price and then get really illiquid, so they're not moving. Interest rates are up. The Fed is trying to fight inflation, yet it's not really working. It's coming down, the inflation rate, meaning prices are still going up, and it's confusing a lot of people.
James Lavish begins by addressing a common misconception. Most people do not truly understand what Bitcoin is. While those within the Bitcoin community grasp its intricacies, the broader public still sees it as a speculative asset. To illustrate Bitcoin's potential, Lavish highlights the vast pool of investable assets worldwide, estimated at around $700 trillion. Bitcoin, at its current market cap, is just a fraction of this, less than 1%. This minuscule percentage underscores the immense growth potential for Bitcoin as it becomes more widely understood and adopted. Lavish acknowledges that Bitcoin is currently perceived as a risk asset. This perception is rooted in the broader economic environment, which he describes as a gambler's economy. Many people are taking high risks, hoping to catch up with inflation or get ahead financially. This speculative behavior extends to cryptocurrencies, including Bitcoin and meme coins. However, Lavish argues that as understanding deepens, particularly with the advent of Bitcoin ETF and institutional interest, Bitcoin will transition from being seen as a risk asset to a risk-off asset, a safer haven in times of economic uncertainty. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Most people don't really truly understand what Bitcoin is yet. We're in our little bubble and we understand it. We talked with people who understand it inherently. And the issue here is that, there's a lot of different ways you can measure how many assets are in the world. But let's just pretend that today there's $700 trillion of investable assets. Well, Bitcoin at this point is a fraction of that. It's
1/700th.
Exactly.
Right.
So and so it's not even a percent and of that. So why is that important? It's important because right now, as you said, Bitcoin is seen as a risk asset. We talked before about how we're kind of in a gambler's economy. Like we have a lot of people out there who just feel like they're getting behind and they're gambling to try to catch back up or get ahead and taking a lot of risk. And so Bitcoin is seen that way in a lot of ways, and as are the meme coins. And when you see the meme coins take off, it's because people are just risking money. They're like, come on, I hope that I can catch up to this inflation. And so with the broadening and deepening understanding of Bitcoin, especially because now that we have the ETFs and you're seeing institutions dip into it. They're dipping their toe in and they're starting to understand it. When institutions really do understand it and understand how Bitcoin is different than every other of those, the digital currencies, they'll understand how it can be a true store of value, how it's digital gold 2 or 3.0 for so many reasons. The immutability, the transferability, the ease to create commerce with it, to move it. You can move $1 trillion of Bitcoin in 10 minutes, basically. So,
right.
But once they understand that and they get to that true understanding of how Bitcoin is different, then they'll begin to not just allocate to it in their investments as a risk asset, but they're going to allocate to it as a risk-off asset. Like they'll start taking money not just from stock portfolios, but from bond portfolios and saying, why am I investing in this long-term treasury bond fund or vehicle when I should be protecting my capital with this thing that's called Bitcoin that will rise in price exponentially as a dollar falls in value exponentially? Why wouldn't I make that investment instead of hoping that I get a real rate of return, which is your hurdle rate again, right, that beats that rate of inflation or that expansion of the money supply? And so the question is, what is that hurdle rate, expansion of money supply? If you could argue that that's really what it is. And then Bitcoin, the price will match both that expansion of the money supply and that adoption as a way to protect that money supply. And so you or me, we have a lot more of our personal liquidity tied up with Bitcoin, protected by Bitcoin, whereas
saved in Bitcoin,
yeah, where there's a lot of investors out there who have way more money than you and me that haven't even thought about it. Mm-hmm. And so the way that Bitcoin price moves is not really directly correlated to just the amount of money comes in. It has to do with the liquidity too. Mm-hmm. And so there's friction getting in and out of this asset right now. And so it's going to get to a point where it doesn't have that friction. And that means it's going to expand quite a bit more in price and asset value, which to me would be approaching the asset value of gold. And that's where you're getting, then you're getting a
12, 13 trillion.
Yeah.
So 12 or 13
or
X
even
from
more
here.
now, yeah. I do talk about this a lot. And the reason is because everybody can feel that things have changed and are changing rapidly, especially after the COVID lockdowns. And they have this sense that something is not the same as it used to be. And you've seen the prices skyrocket, you've seen homes skyrocket in price and then get really illiquid, so they're not moving. Interest rates are up. The Fed is trying to fight inflation, yet it's not really working. It's coming down, the inflation rate, meaning prices are still going up. And it's confusing a lot of people. And really what it all has to do with, and it all comes down to, which you and I talk about extensively, is the manipulation of money. And that manipulation of money has been necessary because we've gotten ourselves in this situation where, and this is all developed central banks, like we're talking about, they've all gotten themselves in a situation where they're borrowing and borrowing and borrowing so much money that they wind up having to manipulate their interest rates and their currencies in order to keep up with that borrowing.
Lavish draws an analogy between individual debt and national debt, emphasizing that just as borrowing can be used to spur immediate productivity, excessive borrowing at the national level only exacerbates inefficiencies and contributes to long-term financial problems. The U.S. government, in particular, is running significant deficits, borrowing around $2 trillion annually while spending a substantial portion just to service past debt. This situation highlights the urgency of finding alternative financial solutions, such as Bitcoin.
Just before the show, you were talking about how, debt is kind of stealing from the future. And I think about it much in a similar way. I think of it more of like it's borrowing from the future, and you can use it properly. And, so if you're an individual and you want to have a business, but you don't, you're kind of stuck in your job, you don't really have enough money. Maybe you want to start a restaurant. It's going to cost you $100,000 to start it, but you only have $10,000 in the bank. And you're like, well, I can continue to work and grind away and keep putting money away, or I can use that $10,000 as leverage for a loan that I can then pull that money into the now borrow it from a bank and start the business right away. Start buying the materials they need, the cookware and the ovens and all, and hiring people, start paying salaries, and then you open up the restaurant and suddenly you're generating income right away. You're generating productivity. Well, that's borrowing from the future. And if you do it responsibly, restaurants are, I use this example because it's really easy for people to visualize, maybe not the best.
Yeah, don't do the restaurant.
Don't do the restaurant. But if you do it responsibly, that's great. You've built a business. You're producing. You're adding productivity into the national GDP, right? But we've gotten ourselves in a situation now, Mark, that the entire nation, all of the Western nations, the developed nations, they're all using debt ad nauseum to paper up inefficiencies, whether it's energy inefficiencies or it's just capital inefficiencies, and they're using that borrowing to close that gap. So, for instance, right now our federal government is borrowing just about $2 trillion a year. Meaning they're above and beyond what they have to borrow to pay down past debt. So we're running $2 trillion deficits at a time that we're not even in a recession. So the irresponsibility that's coming out of Washington is monumental. It's absolutely incredible, and it's mind-numbing for people like you and me who have been in business, running businesses, and you look at that, and it's not only is it irresponsible, it's putting us on a path that's irreversible. And so why is that? Well, because we're running these deficits at a time that we're not even officially in World War, arguable, but we're not in a hot conflict right now somewhere, and so we're borrowing those $2 trillion from who? So we just have to keep borrowing and borrowing and borrowing and add to that national debt. And so what happens? Well, we've seen the debt grow from just when we talk about the debt spiral. You and I talked about this almost 2 years ago on this.
Probably, yeah.
And I wrote a piece on it 2 years ago, August, about how we are entering a debt spiral where we just can't get out of it, and meaning the U.S. government. So what is that, to frame it up? Well, the debt spiral means that we have accumulated so much debt that it requires more debt to pay down that old debt and eventually to pay that interest on that debt. And we're there. So of those $2 trillion deficits we're running, $1 trillion that we're spending a year is on interest on our past debt. So we're bumping up against, when I wrote that piece, we had $31.4 trillion of debt. And now we're just below 35 trillion in just 2 years, and not even. And so we're now at the point where we're spending $1 trillion on interest alone on that debt. And we're spending so much money that we can't close that gap.
Lavish is optimistic about Bitcoin's future. He predicts that Bitcoin's price could soar to between $250,000 and $1 million per coin within the next 12 to 18 months. This optimistic outlook is based on the expectation that as liquidity increases and more investors recognize Bitcoin's value, its price will rise significantly. Lavish's analysis also reflects the broader trend of increasing financial instability and the need for a more reliable store of value. Bitcoin's fixed supply and decentralized nature make it an ideal candidate to fulfill this role, especially as traditional financial systems struggle to manage debt and inflation. Please like and subscribe my channel.